Good morning, traders and investors. Bennett Tyndall with tradinganalysis.com. Thank you so much for joining us. Wednesday, April 7th. Can you guys believe we're already a quarter of the way through the year? My goodness, time flies. Hey, thank you for tuning in this morning. We do apologize for getting started a little bit late. Our fearless leader, Mr. Todd Gordon, is on vacation with his family, well-deserved vacation. We were having some technical difficulties with some audio issues, so we do apologize. We've got a good little show for you this morning. Let's bring in the trading analysis team. We've got Mr. Terry Long with us this morning. Good morning, Terry. How are you doing today?
Good morning, Bennett. Doing just fine. Beautiful spring day here in Southeast Texas.
Gotta love it. Gotta love it. Did you see the from Greg Abbott, what he said in regards to the coronavirus passports? I thought that, or the vaccine passports, I thought that was interesting.
No, I didn't see. All I saw was he was boycotting the Texas Rangers for what the Major League Baseball decision to something political over in Georgia, I guess. So I was like, what? You're going to boycott your own baseball team over something that happened in Georgia? I don't know.
It's good times. Yeah, it was in regards to the vaccine passport that they're talking about. He's completely against them. So we shall see see how things are going. Yeah. You got have you had your second shot yet?
When April 15th.
Okay, cool.
That'll be my second.
Yeah,
my brother. Past 2 weeks now.
Okay, so yeah, you would have probably if you'd had any symptoms from the first one, you'd likely have experienced it by now. So my brother just and his wife just got vaccinated. So we shall see. They got the Pfizer vaccine.
Well, they're getting 3 million. They're getting 3 million to 4 million people a day vaccinated. So we're well on our way to getting the majority of the country inoculated, and I think that'll be a good thing. And things will slowly start getting back to normal. And you know what? The reopening trade, there's quite a bit of stock movement out there. I'll tell you, I was, browsing through screening, setting up for what I was going to talk about today, and just see a lot of good stuff out there, Bennett. Just almost too much to talk about, but we'll do our best today. So.
Yeah, there is a lot going on. So let's not waste any time. We did get started a few minutes late there. So let's jump into it. I'll take you guys through the hard right edge in Motive Wave. We'll take a look at what's been going on in the indexes. We'll quickly take a look as well at gold and oil since Alex is not with us. You can tune into his show tomorrow morning, 9 a.m. Eastern on the Trading Analysis YouTube. So let's jump into it. Hard right edge of Motive Wave. We'll be back with you in a couple minutes, Terry. So good morning once again. Thank you guys for tuning in. It looks like we've got Todd joining us from the beautiful state of Florida. Glad he's enjoying his vacation with the family. Hoping to see some fun pictures. You know what we should have done? We should have had him go out to the beach or something and brought him in as a beach guest for the Wednesday live stream show. All right, let's jump into it. Hard right edge using the Motive Wave platform. It's one of two primary tools that we utilize here at Trading Analysis. In addition to Motive Wave, obviously we've been taking advantage of the power of Optima as of recent. You'll be seeing more from us on Optima here as we go into the summer. So let's jump into it. Taking a look at the S&P 500. And a couple of weeks back, we were having the discussion with somebody in the chat, one of our viewers, and the comment was the overextension in the markets was a source of concern for him and for many investors, given the move that we've seen off the COVID lows, the mixture of sentiment, and of course everything that's been going on with yields. So, Todd suggested to us a couple of weeks back that, look, if you just break Elliott Wave down into its most basic of concepts and look for the trend establishing patterns and the corrective patterns and position around those, you can absolutely operate in a market, trading in a market, regardless of having an understanding of what the higher degree count is. And that's something that we stress a lot with our members at Trading Analysis. Oftentimes on our member webinars, we'll have a member present a name that doesn't have a lot of trading history. And when you don't have a lot of trading history, it makes it difficult to determine and have conviction in any patterns that you might see. So what we tend to suggest then is that you trade the pattern as opposed to trading the count. And we'll look at an example in the ticker SNOW here in just a minute. But what Todd noted a couple of weeks back is the fact that, look, sure, the Elliott wave count from the March COVID low is a little bit subjective. There are a couple of valid interpretations from a rules and guidelines standpoint. And so that makes it a little more difficult to have conviction in any higher degree count. The higher degree counts are just the longer term, more dominant structures for those of you who are new to Elliott. And so what he suggested is, if you break it down into the most basic of concepts and look for your 5-wave moves in the direction of the trend and your 3-wave moves against the dominant or higher degree trend, you can absolutely trade within a market. And what he noted was the fact that we're still seeing the 5-wave progressions to the upside and the 3-wave counter trend corrective pullbacks to the downside. And until we see a 5-wave decline off of a market high, we're going to continue to look for upside in the indexes. So zooming in here, I don't really care what the higher degree count is at this point because I have upside price objectives that are beginning to come into focus. And what we've got going here is the interpretation that I've been tracking that basically still puts us in a 5-wave rally from the COVID lows. This looks at the September through October decline as the wave 4 correction. We just came out of wave 4 of this higher degree fifth, and I'm just looking for an extended kind of blow off top here into this wave 5, and then potentially we get a larger corrective pullback. Alternatively, we could be moving higher in a 3rd wave position, which has implications well above and beyond my targets that I'm going to line out for you guys here today. But regardless, we still see the 5-wave moves to the upside, 3-wave counter trend corrections to the downside. So let's zoom in on price action and talk about what I'm currently seeing in this market. So I made note of the fact that it's really rather interesting. If you look at a parallel trend channel of the move off of the March COVID lows, as we had the very first positive vaccine news on November 9th of 2020. I remember the news flow here, how the intraday trading kind of impacted things. And what happened is we then ran into the middle boundaries of the trend channel, the parallel trend channel off the COVID lows. You'll notice that we had a little bit of resistance there. We consolidate. We eventually move up, and then we see this big 3-wave pullback from March 16th through March 4th. That took us just south of the lower boundary, so the lower trend line of this trend channel. From there, we get a sharp 5-wave move up, a 3-wave pullback into the March 25th lows. So we've kind of attempted to reclaim this trend channel, and I'm just looking for one final 5-wave rally up towards 42 to 43.50 in the S&P. At that point, depending on what happens there, we can start to fill in the higher degree count. But until then, I remain positive on the markets. So let's dive in and let's take a look at everything that's happened here, because this is where things get really interesting off of the March 5th low. I'll take you off of the daily chart and we will move right over to the 1-hour time frame. So on the 1-hour chart, and you can see the yellow circle there for context, just to give you guys some understanding as to where this price action fits in on the daily chart. Starting from the March 4th low, you have a 5-wave rally into the March 17th high. You then have a 3-wave measured move complex correction, exact equality of the secondary corrective leg compared to the first corrective leg. Wave 2 was a 50% retracement. And then from there, I'm going to take you off the 1-hour and down to a 15-minute chart, because what happens from the March 25th wave 2 low is we move up in a 5-wave trend. And going to last week, we were coming off of the B wave here, and we had this C wave down towards 39.30, which would be equality of C as compared to A. The markets opened up last Wednesday and continued to rally. The market said, you know what? We don't need a C wave low. We're fine with the C wave's relationship of 61% compared to A. Within the B wave, you've got a beautiful 3-wave measured move. So there's your ABC inside of your B wave. That took you to a 61% retracement, spot on 61% retracement. So likely the wave 2 of that higher degree third is complete, and we're now contained within the 3rd wave uptrend. Going into yesterday, we had outlined a move up towards the 2618 objective in this wave 3 position for our members. From there, we were looking for a pullback here. So what I'm looking for now is within blue wave 3 of orange wave 3, which pairs up to this wave 2 pullback and this 5-wave rally, is the idea that we just completed green 3 of blue 3. We have support between 40.42 and 40.64 for the S&P. That's the zone that I'll be watching for support to give us the potential breakout towards the 1618 objective. The 1618 objective is at 4163.72. Now, as it stands, I'm pairing up this 4th wave correction to this wave 2 that you see there. If for some reason we exist longer in this consolidation than I have outlined on this chart, that's absolutely fine. Basically, what we would then be looking at is the idea that we're pairing up a wave 4 to that larger wave 2 correction. So I remain bullish. I like the breakout that we're seeing. I love the angle of ascent that we're seeing here in the S&P. I do think we have some consolidation to get through as we digest this new 4,000 handle. Let's now move over to the Nasdaq 100. If you guys follow our Trading Analysis YouTube channel, I put out a video. I typically don't do a lot of work in Optima, at least publicly, and I put out a video just noting some interesting rotations at play in growth and tech stocks, discretionary, so typical bull market sectors. And I was noting some similarities there. Let me just take you over to yields really quickly. I was noting some similarities in what I was seeing there compared to what we saw in Q4 of 2018. And as it stands now, it does look like the move back into favor for tech and growth is unfolding. We're seeing a lot of strength here in the Nasdaq. So let's dive into it. We're taking a look at the 15-minute chart. First, let me take you back to the daily chart just to show you where this all fits in. So what we looked at last week was the fact that we had yet to make a new high in the Nasdaq. The Nasdaq, similar to the S&P, gave us a nice 3-wave corrective pullback from Feb 16th into the March 5th low. So the S&P bottomed on the 4th, Nasdaq bottomed on the 5th. From there, we did get a move up in either 1 or A and a pullback in 2 or B. Taking you off of the daily, let's drop our yellow circle on here so we can get an idea as to where this fits in on the 1 hour. Off the daily down to the 1 hour chart. Let me fit this in here for you guys. All right. So what we were looking at was the fact that we had a 5-wave move from the March 5th low and a 3-wave pullback. The 3-wave pullback was more or less a measured move correction and about a 61% retracement. We then established a leading expanding variety diagonal in 1, pullback here in 2, and we're tracking a very similar subdivision to that of the S&P. Looking for a bit of a pullback, then a move up to the 2618, a further consolidation. The 1618 objective of orange 3 compared to orange 1 takes you to new fresh highs for the Nasdaq. The only other alternate count that I see as a possibility is the idea that perhaps we're going to see further consolidation in tech, which is not my preferred interpretation. I'd probably assign this about a 35%, 40% probability, with about a 60-65% probability that the wave 2 low is in and we're moving higher in the 3rd wave position. But you'll notice, I want you guys to pay attention here because we've been looking at measured move corrective pullbacks, okay? 3-wave moves to the downside. 3-wave moves also happen to the upside. They can happen in periods of continued downtrend. They can also happen simply in a B wave of an overall 3-wave pullback as part of a higher degree uptrend. So take a look at this level, this 3v1 equality level at 13,748. That's where we are currently for the Nasdaq. We really want to see the Nasdaq get through equality of 3 as compared to 1 in order to discount the idea that maybe this is some sort of a flat. A flat is a 3-wave move to the downside, a 3-wave move to the upside, then 5 waves to the downside, then the consolidation is over. But regardless, even if that's the case, this doesn't give us a 5-wave trend establishing decline to the downside in tech. So as I stated a few weeks back on the YouTube video, I do think the sell-off in growth and tech stocks, high multiple tech stocks, was a little bit overdone. Terry's always, been a proponent of the fact that even when we see weakness in growth and tech, that you shouldn't be void of those those particular sectors and stocks. So some really interesting levels at work here in the Nasdaq. Let's take a look at the XLK, the sector spider ETF for the technology sector. You'll see here that we have a very, very similar interpretation to that of the Nasdaq 100. From the Feb 16th through the March 5th low, that unfolded in a 3-wave measured move. From there, you get 5 waves up into March 16th, 3 waves down. 1, 2, we just hit the 1618 wave 3 objective. We'll be looking for a wave 4 pullback, then looking for a likely extended 5th with a potential target of the 1618 up there at 146.36 for the XLK. Some other interesting stocks that I have my eyes on, Amazon in the consumer discretionary sector. Amazon has actually been in a long period of consolidation. Let's just pop over here to the weekly chart. Looking at Amazon, we had a move up in the wave 3 position to the September high from last year at about a 200% relationship compared to wave 1. If I take you off the weekly, down to the daily, this just looks like a big old 3-wave pullback. This does not look motive impulsive or motive diagonal to the downside. So this is not a trend establishing move in our opinion. I did establish a equity swing trade, so I am long this stock. Amazon, I do like the breakout that we're seeing here. You'll notice if I just hide some of the smaller degree trends, the wave 4 correction did exhibit equality to the wave 2 that we're pairing it up against, so the wave 2 of the same degree. And we've seen since a 5-wave move up and a 3-wave pullback. Again, similar to the Nasdaq, we now want to see a breakthrough equality of this initial leg projected from that pullback. So that's an area of resistance that we need to get through, but really like what I'm seeing there in Amazon. I had a request for Tesla. Let me show you a good example of a motive impulsive trend establishing move. So here in Tesla, we've had an incredible rally from June of 2019. We have 5 waves up into the Feb 2020 high, a sharp corrective pullback into the COVID lows, a move up in wave 3. Wave 3 has a nice 5-wave subdivision, taking you off of the daily and down to the 1-hour chart. Take a look at this move off of the top here for Tesla. You have a move down in 1, up in 2, down in 3. Wave 3 was 261% of wave number 1. Wave 4 was equal in about a 38% correction. And wave 5 was 61% compared to 1 and 3. Additionally, if you take a look at a Elliott wave channeling technique that we utilize, taking the 2, 4, 3 trend channel when used in combination with your fib targets often gives you your 5th wave targets and your 5th wave completion. Look at that, completed right there. I now am not sure whether this is a B wave triangle or just a simple 3-wave move in B, and we're going to immediately proceed lower in the C wave. But I don't think this correction is done. I do think we're going to see further consolidation and further selling in Tesla. I am still longer term bullish, which is why it's all about time frame when considering the names that we look at here together. So Tesla, I do think we see further downside. I mean, gosh, if you consider the fact that we really broke through the 500 price level with very little resistance, we've never back tested that key psychological target. So I still think Tesla goes higher out of the wave 4, but I still think there's further downside to go. All right, let's wrap it up taking a look at Snow. This is a great example. Actually, I've got 2 examples. This is a great illustration of the concept of trading patterns when you don't have an understanding as to what the overall highest degree trend is. And here for Snow, it had the IPO, it kind of chopped and slopped for a while, and then we get this sharp move up in A, 5-wave trend establishing move. We get a B wave pullback to about a 50% retracement, and then you see another 5-wave rally because guess what? We have initial directional move in a consolidation in B. So at the very least, we should at least expect a secondary move higher in either C, or potentially this could have turned into wave 3. But being conservative and just trading the pattern, you still got that equality objective as C compared to A. Guess what? Snow did it again now to the downside. You move down in A, 3 waves up in B in a measured move fashion. There's that equality of C compared to A. Took you to about a 50% retracement. And then we just sold off all the way from 427 down to 203. Equality has been met. It does not get any simpler than that when it comes to Elliott. So now guess what? We look for a trend establishing move here, see if we can rinse and repeat on the upside. If you look at from Snow, the last chart I have for you is Space, SPCE. And here's a great example of that same kind of concept. You have an initial directional move in A, consolidation in B. You got a secondary move that was more or less equal. All right, guys, that's it. I've taken enough time. Back over to Terry. Let's get you set up. Take a look at sector focus. See what's going on there. We've got a lot to talk about. Some interesting signs in industrials. You've already got the screen. So, Mr. Terry Long, apologize for taking so much wind this morning.
Oh no, well we got time to fill because we're missing a third. So
yeah, and I am going to get oil and gold at the end of the show, but I wanted to make sure I had time for Terry. So, all right, let's jump into it. Sector focus with Mr. Terry Long.
Hello, traders. I'm Terry Long at tradinganalysis.com here with your weekly sector focus. Let's jump right in and look at last week's performance of the index and sectors. I guess welcome to the beginning of the second quarter. Although last week was a shortened trading week, investors piled back into technology stocks. Now, the S&P saw a modest 1.14% gains. The tech-heavy Nasdaq was up 2.7%, more than double that of the S&P. The communications sector rose 3.17%, followed here by technology up 2.12%. Consumer discretionary was also up 2%. Lagging sectors were energy, materials, healthcare, and consumer staples. Now this week, technology and communications have resumed their uptrend, leading the S&P as it makes all-time new highs here. On Monday, the S&P made an intraday high of 4,083 before closing down to about 4,078. Now, while the Nasdaq did not make a new high, it did close up 2% on Monday. The XLY, the XLC, and the XLK all captured 2% gains on Monday. Let's move this out of the way and show you what's going on this week here. So we've got the XLY up 2.7%, the XLC up 2.36. You can see it here in the table. So we continued to add to Monday's gains here in discretionary and communications. Now, semiconductors weakened a bit on Tuesday, declining about 1.5%, but the XLK is still up 1.63% for the week. Let's move over here to our weekly RRGs. Our leading sectors this week remain unchanged, with energy, financials, communications, industrials, and materials here. Now, energy stocks retain their outperforming relative strength positions. However, there is momentum decline in progress. Let me pull up a price chart of the XLE here. And you can see the XLE ran into this upside resistance around this $54 level and has made a pullback just above the 50-day moving average. Now, to me, this has the look and feel of some type of diagonal in the works here. And in this part right here, the end of this correction may not yet be over. I think this is consistent with what we're seeing here in the RRG chart with a declining vector, meaning declining momentum, and usually a period of consolidation is ongoing here. Well, the financial sector sports a shorter tail than the energy sector. See, this is 4 weeks. You got a much shorter tail here. This means that momentum and relative strength are more stable. Now, this last tick here, this represents Monday and Tuesday's price performance here, and even last week. You can note that the velocity is very low here, so very short on this last line segment. And so I don't put a whole lot of emphasis on the heading direction until we see a little bit further push to the right. But it does look like financials are trying to recover a little bit here. The communication sector is still rising into the leading quadrant, but its vector has made a shift from a more momentum to a more relative strength slope. Let's take a look at a chart of the XLC. The XLC is now running in the upper half of a bullish trend channel. You can see it took a period of consolidation here. This was mostly related to the Archego margin call, which negatively impacted Viacom and Discovery stocks. It has likely resulted in this correction here. And nevertheless, this sector remains outperforming. The industrial sector, here's the industrials. The industrial sector has returned to the leading quadrant, continues to see rising momentum. And we now have 4 sectors in the leading quadrant, with materials closely approaching here. The materials sector has a leading trend and also a northerly vector, and it appears positioned to be following this industrial sector up here into the leading quadrant. The only thing about the materials, let me just animate this and take it back a little bit in time. And watch right here. Watch this. Watch the zigzag motion. A little bit of indecisiveness. It tries to go up, and then it moves left. It tries to go up again, and maybe now we're finally getting some conviction here in materials. But it's been very hesitant, and I think over the past several weeks that indicated to me some investor reluctance remains. But it looks like we're gaining velocity now. We may be seeing materials push higher here. Now, while strong gains were made by technology last week, the XLK may be on the verge of a reversal here. Here is the XLK, but we're not quite there yet. If I switch over to a daily chart, though, let's take this from a weekly to a daily. And here's the XLK on a daily chart. You can see that we're over in the improving quadrant, sporting an improving trend as indicated by this blue color, moving to the right. We've got an easterly vector here, which means we are gaining relative strength. Now, while I'm here on this daily chart, I want you to just take a look down here. I'll note that the XLC and the XLF are seeing some short-term lagging performance here. They're pushed down into this weakening quadrant, but the XLK is on the run. So let's put this back on our weekly rotation here. Now, the consumer discretionary sector continues also to push deeper into the lagging quadrant, and we're monitoring very closely for signs of trend reversing. Possibly with this last tick, you can now see Monday and Tuesday's price action is giving us a hook formation, which is a very early signs indication that momentum is going to start rising. Investor interest is going to start piling back in. Consolidation periods are ending in several of these stocks. So we want to see further positive development here in this consumer discretionary. Even though it's down here in this lagging quadrant, this may be a good time to pick up several stocks in that area there. Now, the real estate sector, it continues to rise higher into the improving quadrant. Many of stocks in this sector are seeing a resurgence in upward momentum, But kind of the opposite of the XLY here, we've got a downward hook on Monday and Tuesday's price action before we've crossed over into the improving quadrant. So this is a bit of a red flag to me that maybe this group is just not ready to accept full leadership, and we may see another rotation back around and regain some strength again before pushing higher into the leading quadrant. So we'll keep an eye on both of those. We've got a lot of rising momentum here in consumer staples. Let me get my notes caught up here. The utility sector, just not so much. Utilities is just meandering and actually continuing to decay and move further down. Healthcare is still going down. Healthcare and utilities I would avoid. There may be a few individual plays there, but wholesale, those sectors are not good. The staple sector is rising now up into the improving quadrant. We need to watch for an improving trend here, and there are several good plays coming up here in the staples, and we will let you know about those. Now, we haven't visited growth and value charts lately. Let me pull this over here. I want to show you that on the weekly RRG, we still have growth in the lagging quadrant and we have value in the leading quadrant. However, if you look over here at the daily rotation, you can see continued gains made here in growth and decay in value. So we have the rotation moving growth over into the leading quadrant, and it's right there on the border right now. I think Bennett was looking at this the other day, wondering whether we were going to see growth come up short and not make a crossover. But if we see continued gains in the large cap tech like we've seen last week and or so far this week, this is just this week's performance. We've got large cap growth, large cap index, the large cap value, right? Growth 2%, value 0.6%. So there's a big multiple headed here. Growth over value is up 1.86 versus 0.6% there. We've got basically also it's large caps, mid caps, and small caps, which I find is very interesting in this order here. All right, today's sector focus is going to be on the industrial sector. This is the top 30 stocks in the XLI. Now, strong rising momentum has positioned this industrial sector back up into the leading quadrant. And you can see the majority of the stocks here are exhibiting rising momentum. Now, there's several stocks here also seen with blue vectors, meaning that they have an improving trend. Okay. And even down here in the lagging quadrant, we've got a couple with blue trends forming. We've got Carrier Group and Honeywell pushing higher. I expect this list to continue to grow, and I think some of these that are in blue are going to start shifting to green as their trends move up into leading trends. Now, a couple of our longtime leaders, Johnson Controls and John Deere, been seeing a little bit of consolidation here, a little modest consolidation. We've got General Dynamics pushing strongly up here. Let's pull a price chart of General Dynamics. You can see the effects of rising momentum on the price appreciation here in General Dynamics. So starting in early February, the slope of the price trend increased as this stock moved impulsively higher, and it's reached pre-COVID resistance levels of about $190 here, where I would expect to see a little bit of sideways consolidation before resuming an uptrend. So we've got a overhead resistance line coming up here. The General Dynamics, you got parallel movement of the 20-day and the 50-day. You got positive slope here on the 200-day. I think there's a big opportunity here for this one to continue to outperform. All right, let's take a look at the industry groups that make up the industrial sector. There are 16 different subgroups shown here in descending order by relative strength ratio and in this weekly RRG. Now, looking at the vectors, just doing a simple screen for a northeasterly heading is not going to do much for me, all except for maybe one group all are increasing, all are moving north, right? I only have one group declining, which I think, and that one group is the marine transportation subgroup. And let's switch over to a price chart layout, and let me show you here what it's been doing. So this is that marine transportation group, and you can see its period of consolidation. It's moving up in a parallel trend channel, but here's the period of consolidation that has caused that downward shift in it. All right, let's switch over to yes, I'm on the right one here. Industrials chart tab. There we go. We disappeared here on me. All right. So if I scroll down through several of these, I've marked several different key support and resistance layers here that I think these stocks are going to see. Here is the airlines index. The airline index is moving higher up in a parallel trend channel, but it's challenging some upside resistance. Now, all three moving average lines are moving higher in parallel, indicating solid uptrend in place. Here's heavy construction. It's also in a strong uptrend. Now, this one's recently broken through some upside resistance, which is now support level, now setting a new all-time high. Here's commercial vehicles and trucks. Come on. There we go. And you can see here we're also hitting overhead resistance. So period of consolidation, we're testing that resistance level here. And the same is true for the transportation services index. Pull that in. So all of these guys, everything in this list is just moving higher, and that's all indicated by the positive vectors that we're seeing here. Let me skip on down to the trucking index here. Now in this trucking index, you can see a longer period of consolidation lasting from September 1st all the way to February has finally been cleared, and this group is in a confirmed impulsive uptrend channel. Done some filtering, offline screening, and just want to give you guys a list of stocks here in the industrial sector sporting improving trends as of yesterday, which you can take and apply your own technical analysis to identify suitable entry points for your swing trades and or long-term portfolios. You almost cannot go wrong picking something up in the industrial sector, as much of it's in a confirmed uptrend, but you need to do your diligence and look for an opportunistic pullback zone to add new or to add to existing positions. That's all I've got now, guys. Back to you, Bennett.
Much appreciated. Thank you, Terry. We did get Alex back, but I think he got tied up. So what I'll do is I will jump in. We'll take a quick look. There he is. Let's see if we got his audio. I think I fixed it. I think he fixed it, rather. Alex. Still no Alex. We tried. Not sure what's going on there. It looks like his levels are trying to register, but not a full signal. So, all right, let's jump in. I'll take you guys quickly through gold, oil, and the dollar, and then we can go from there. So, what we're seeing here in the dollar is, what we're seeing here in gold. Let's start there. We've had a pretty interesting move from channel resistance up into the March 7th highs. We have a move down in one, up in two. Here's your nice 5-wave subdivision of wave number 3. Wave 3 was 200% compared to wave 1. You'll notice we had this this C wave here as an alternate, and the reason we had that as an alternate is as we reached the March 23rd low in crude, that was actually a 7-swing structure. 1, 2, 3, 4, 5, 6, 7. So the idea that maybe this was a B extended 5-wave move in C was not at all out of the question. From there, we get this move up in A in a leading diagonal, 3 down in B, and a move up in C to about a 50% retracement. We are now moving either here in wave 5. You'll notice yesterday we had about a 78.6% retracement here in this wave 2 position. Now what happens if crude oil breaks north of the 786? That's actually not a problem, because what would end up happening is we would just extend this entire 4th wave out. It's not likely given the time elapsed in wave 2 compared to wave 4, but it is a possibility. Ultimately, Alex sees, and myself, we see oil resolving lower. We've got an initial target of at about 56. Below that, we've got 55 all the way down to 52.5 as potential targets in that 5th wave position. Let's go from crude oil. We'll quickly visit the dollar. Our preferred interpretation suggests that a 5-wave trend, so a 5-wave trend establishing decline off of the March COVID highs for the dollar, has come to completion. We have a move up in 1, down in 2. This was kind of a disguised, tricky flat, but we picked up on it. You've got 5 waves up into the wave 3, 2, 6, 1, 8. We're looking for a consolidation here in 4 before resolving higher in 5 of A. We will then complete some sort of a counter trend B wave correction, and then you'll see that secondary move unfold. What's an alternate if the dollar does see a breakdown from here? It's a possibility. We'll continue to track it. Not our preferred interpretation. You can see this structure kind of falls out of the guideline of the right look. It is somewhat supported based on the guideline of alternation in that wave 2 is sideways and wave 4 is more directional. We've seen about a 38% retracement in this possible alternate. We will only fall back and refer to this interpretation should we break through invalidation on this count. So that's crude as well as the dollar. Looking at gold, we have been tracking 2 counts, one which suggests this 3-wave structure into the massive 1650 to 1700 cluster of fib support is actually all of the wave 4. Alternatively, we have a view that says, okay, this is still a 4th wave position, but it's not quite finished just yet. This is actually just the initial structure within the 4th wave position. Regardless of which of these 2 counts is at work, we should still see some sort of a move back to the upside. You'll also notice we're now back testing this broken parallel trend channel. So back over to the alternate that says the wave 4 is over. We did see a move down to a new low here. This could be all of orange 5. This could also still be part of this 4th wave. Highly unlikely, but certainly a possibility if we were to entertain the guideline of alternation. So watch that 50% 1762 resistance. If we break north of that, then yeah, we'll anchor that 5th wave there and look for either the resumption of the 5th wave or some sort of a 3-wave move back higher in the X wave. All right, I think that is about it. One last chart I'll drop for you guys here is dollar yen. We've been tracking an impulsive structure in dollar yen. So out of this sideways 4th wave correction, ABC measured move, 4v2 equality, took you straight to the 1618 objective in the 3rd wave position. That also gave you 61% in wave 5 compared to 1 and 3. You'll notice that equality of 4 compared to 2, that's up here at 109,609, and the 38% is down at 108,614. If you're interested in more of an in-depth discussion on this, as well as an update on what's happening in the world of crypto, don't forget to join Alex tomorrow morning for his live stream show, 9 a.m. Eastern, on the Trading Analysis YouTube. You can go to youtube.com/trading analysis to check that out. Let's bring in the team. Alex, Terry, good show. Apologize for not having Alex in. We did have some technical difficulties. We'll see if we can get that resolved for next week. Any final words of wisdom?
You got him. He's froze there now, but he's contemplating, right?
Oh, I'm sorry. My bad. He is probably
no problem. Yeah, we love Alex, but yeah, so we get his audio issues fixed for that YouTube show tomorrow morning. But just
I was
what's
gonna say,
happening today.
he's the only one of us with his own show, so of course we love Alex. All right, guys. Good show, Terry. Good times. Members, we'll see you over there in the member webinar in about 20 minutes or so. Keep our eyes on the opening tape. I'm over here on the stream desk, so I can't even see the trading station. No idea what the markets are doing at the moment. So that's it, guys. Give it a thumbs
up, guys.
Subscribe, turn on notifications if you're interested in staying up to date with Todd Gordon, as well as our live streams here. We would also encourage you to subscribe to our Trading Analysis YouTube channel. We're trying to grow that. We'll have another show on there here in the near future. Terry, Alex, and myself, we put out a couple of free videos each week on that channel as well. It's a great way to kind of stay up to date with what we're doing between the Wednesday shows. And of course, you can check us out, tradinganalysis.com. That's it. Good show. And we'll see you guys
See you next week.
Take care.